The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 24th, terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Now is just fine. 877-927-6648. If you can't get to a phone, you can always send me an email, steve@tfnn.com. Inside that subject heading, just put radio show question. And, of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 199 points. She's printing 23,472. S&P up about 5 points. That's 2569. NASDAQ 100 up 12. Russell's up 5. The New York Stock Exchange is up a bit. The transports are up about 27 points. You've got the volatility index back 2.5% or down 28 cents. We're going to key in on that during the, I think during the open segment here. You've got gold back 370, silver's off 13 cents out here, leading the charge the upside. 3M. Triple M up 17 bucks, nearly 8%. Polaris Industries up $16 or 15%. Amazon up 10, about 1%. John Bean Technology up 9.85. Stanley Black & Decker, they are up nearly 5% out here. To the downside, it's Whirlpool down 18 bucks or 10%. They're taking it to the to the pool. You've got Biogen down 14 bucks or 4%. Lockheed Martin down 9 or 3%. So we've got individual stocks to look at. Of course, I want to look at what you want to look at. And in this case here, let's start off with what's going on in the daily time frame-ish, I guess, and some intraday. And then let's go ahead and step back, assuming, that, depends on what questions come in, but we'll just step back and take a look at the Dow. Because I have had emails out here asking me, am I concerned that the Dow is making such a huge run to the upside, that this is it? Market, how can you stay so bullish out there? Just emails like that. And, let's just simply put that to bed by taking a look at the patterns out here. But first, let's just take a look at what's really going on today that I think you should consider out here. First place, doesn't have to be the first place, but it's going to be the first place that we start, is just simply taking a look at that advanced decline oscillator reading for 3 of our indices. New York Stock Exchange, that's the first panel on the left. NASDAQ Composite next to it. Dow next to it. And then take a look at the S&P 500. I don't have the advanced decline data in order to calculate the advanced decline oscillator reading, but I do for the first 3. Now, in the case of the New York Stock Exchange, we're still down below 0. If you take a look at the summation index, that is the panel number 2, when it's showing you a red line or a green colored line out here, you know which way that where that oscillator is in relationship to 0 out here. And from a trend standpoint, it's a tool to assist with that. So even though we're really at highs out here inside the New York Stock Exchange, we've pretty much been down below that 0 level since, looks like, October 17th. Yeah, October 17th, and we are days later, not 7 trading sessions, but 7 days later out here. And yesterday, you most certainly had a key reversal session. The prior day's high and low was exceeded. We closed in the opposite direction, and we're at extended conditions. Those are the 3 elements you must have in order to be able to call a candle session, such as yesterday, a key reversal day. Now, a lot of times people will call them key reversal days, and they're not in extended conditions out here, or they don't even, forget about. You've got to have. Does it matter? Maybe it does, maybe it doesn't. Just suggesting to you, New York Stock Exchange has given us some topping signals out here. Now, prices pulled back to support, which was the gap to the upside, so it hasn't exactly broken through a support level. We can take a look at that. NASDAQ Composite. You and I have been talking about how this has been or turned to the trend short. Again, we're looking at a daily chart out here. Turned to the so-called sellers are in control area back on October the 12th. We've been below that area, even though price moved to higher ground, which it did and can happen. But when price moves to higher ground, when this oscillator reading is not confirming, it tells you you've got some type of divergence. Anticipate some type of retracement. Major top? No, you've got to have many other signals for that. In the case of the Dow, hey, you can set it and forget it. I don't know what that means, but what it does mean is we do not have any indication here that sellers are in control. Now, you did not need me to show up at 1:12 in the afternoon to tell you that. You clearly saw that. But what I'm really saying is we don't have a diverging pattern with regard to its advanced decline oscillator. I just caught the end of Tom's show, and like he said, or a segment that he does, or that the guys do at the top of the hour, he said the Dow is on its own. Then the Dow is on its own, but many people, well, I can't say many, several people have emailed me and asked me, isn't that a concern? Well, we'll go take a look at that. The S&P 500, probably the keyest area, the keyest price point, because it too, as you can see, had a key reversal session yesterday. Again, prior day's session, high and low were exceeded. You closed in the opposite direction. In this case here was a big old bearish engulfing candle as well, and we're at extended conditions out here. Now, the key here, what these charts are telling you and I is to anticipate and expect more of a retracement. I got to make sure that we don't even really call this some type of and when I say sellers are in control, I'm not talking about just downright, outright bears. We're looking at a daily chart out here, right? You got the normal gyrations. But this says to anticipate both the New York Stock Exchange and S&P 500, really the NASDAQ Composite as well, each giving us signals that the market wants to do some type of retracement out here to where we haven't even begun to take a look at that and talk about that, but we'll take a look at some levels out here. The key level to be watching today is going to be the spot volatility index. It's trading right now at 1076. 1042 is a number to be watching. You might say, what do you mean, Steve-O? Sometimes I say, what do you mean, Steve-O? If we take a look at this chart right here, here's what the studies will show you. Don't believe me. Just simply go back and do the work, because there are a lot of times where people would talk about, hey, the volatility index is low. If you use that complacent type word out here, you can't trade with that hogwash. So go back, take a look at since 2009. Does it really matter what the price of the volatility index is, or does it matter where it's trading in relationship to its 50-day moving average? Steve Rhodes with TFNN. It's the latter, my friends. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we were taking a look at this chart right here. This has got the S&P up at the top. You've got the spot volatility index down at the bottom. My contention, which you will prove for me by going back and taking a look at historically, the spot volatility index compared to its 50-day exponential moving average, when prices to the north of that line is where you start to see the greatest carnage inside a retracement inside the S&P 500. I don't care if the spot VIX index is at 42. It doesn't matter. It's all in relationship to that line. And that's what you will see when you go back and take a look at 2007, 2008, 2009, 2010. You'll see that that is really the key area. Now, what we know about yesterday was towards the end of the day, that volatility index, spot volatility index, shot up. Got over the 50-day exponential moving average, was like about 11% one-day rate of change. Each of you out there knew this, right? Because we have shared the secrets of the volatility index, right? We don't really give a gosh darn what that price point is. We care about where it is in relationship to a couple of lines out there, because that you can anticipate and you can trade from, as well as whatever that one-day rate of change might be. Yesterday was telling us that you were going to see some type of bounce or bottom in the market. It's really up to you and I to try to identify, well, which one is it? Now, what we know about today is that so far what it's telling us is just bounce. Just simply bounce out here. Now, the reason that I say that, and we'll know at the end of today's session, see how I didn't say end of the day, is where does it close? Where does the spot volatility index close? If it closes below 1042, that's the 50-day line right now, below it, then what do we think? Bounce or bottom? Bottom, exactly. At least another run for the highs out here. Why? Because you'd be back below the 50-day. If it closes above, what does that suggest to you and I? Suggest to you and I just a bounce that we're seeing today, and then we should see some pricing pressure to the downside. We should see, in fact, the spot volatility index get up to a price point of at least 12. Maybe higher, but at least 12. That's going to be the top of Stevie's blue line out there. So that's what we know as we speak. So then as we know that, if we're calling for it to be a bounce thus far, then we can start going over and take a look at the equity futures contracts. Now, the biggest message that you received earlier today from the equity futures contracts happened to come from the NQ out here. The reason that I say that is because it was forming several patterns all at about the same time that show you short-term tops, short-term bottoms. In this case here, short-term bottoms. If you take a look at the short-term top out here, when the NQ 30-minute, let me get a crosshair out here, at the exact time frame of 2000 hours, how do you like that? That is, my math is 8 p.m. back on the trading session of, well, I got to have something selected, it says out there to give you the date. That was October 22nd. That was your high. This is really important. Price is moving higher. Doing less relative energy. You get a nice little bearish candlestick that forms out here. That was giving you a signal of a short-term high out here. What does price do? Price runs all the way down to this morning at 10 o'clock, starts to push lower with less relative energy. That's why you get it's the only way that my system will go ahead and give us one of those black lines out here is when that occurs. Now, price can continue to push lower out there. It doesn't really matter until we see the cavalry. The cavalry arrived on a 30-minute basis, specifically here at 10:30. Now, for those that are aggressive traders, they were also noticing that what was occurring was that the market was in that seventh wave move, letter G on my screen out here. So that is where you can see tops or bottoms have the biggest counter trend rallies or the biggest rallies, the biggest changes in trend. All of those types of things can occur. More conservative traders, you wait for the cavalry to arrive. Now, what did occur, we saw that bounce, thus far, bounce out here. Are we going to get more of a bounce? Very possible. What are we going to use to identify whether we do or whether we don't? Well, we're just simply going to fall back to our market profiles for that 30-minute time frame. If we do that, it looks like this chart right here. Now, here's one thing that we know, and that is that at the time frame of 11 o'clock this morning, we saw price close above a bearish structured 30-minute market profile. We say bearish structured. I'm going to go ahead and turn price off because it's much easier for you to see on HD, by the way. Oops, sorry about that. The TV popped on out there. So I said bearish structured because of where the center line is in relationship to the top of the box. So that says that really the level of about 60.83 should have held. When it didn't hold out there and price closed above, it said, aha, what wants to occur out here is for price to keep moving higher. Another profile forms. This was just as we were coming on the air. This is right at 1 p.m. And you can see this new profile also bearish structured out here. That doesn't mean that price has to turn down. It says there is a significant resistance level at 60.89 even Steven. That should be significant resistance. If you see price close above that level, that's just telling you more counter trend rally to occur. As we speak right now, that level hasn't been taken out. So that's your resistance area as we take a look at the NQ. I don't have any idea how it's going to play out for the rest of the day out here. Inside of the NQ, to change our opinion that it is a bottom, not a bounce out here inside the market, the NQ has to get above on its daily chart Stevie's red line. Now, let me get rid of a couple red lines out here. I don't want you to take a look at those. I'm referring to the one that is priced at 61.10. We'll just use 61.10. That counter trend rally can easily head up to 61.10 inside the NQ. That should be the extent of any rally that occurs today, overnight. Doesn't say that it's got to get there. That's where your price target would be if you see it close above 60.89. That's on the current 30-minute chart out here. There's going to be other profiles that may form, and then we just simply would have to fall back to that. Now, that's what the markets are doing. So we should anticipate, not in the down necessarily, but inside the ES, inside the NQ, maybe even inside the Russell, that what the market wants to do is still pull back a bit out here. Now, this is really a great segue into, hey, the Dow, and Steve-O, aren't you worried about the Dow? You know, isn't this a blow-off? There's going to be people out there that are going to tell you that it is. I'm going to tell you BS, okay? Absolute BS, all before Steve shared with you the following information. Now, we just took a look at intraday charts out here in the NQ that help to identify short-term tops, short-term bottoms. Now, the cool thing is when I built that tool, built that indicator, it was really as a result of the long-term charts. I just made some modifications so that it could work on all instruments, all time frames out there to help you identify where the most logical spots were for price to go ahead and change trend. How important is that to you, depending on the time frame trader that you are? Well, and the bigger picture out here with regard to the Dow, what you and I know, because I've gone back to do the work since 1886 or something like that, there is one pattern that exists before the beginning of any significant price top, before any bear market that forms out here. It has always been present. I don't mean like almost always. I don't mean like mostly. I mean all the time. So for those of you that like to say, well, is this time going to be any different out here? Is this time going to be any different? I don't think so. Dow is going to be heading much, much higher. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. I love how I get to use that BS effectively out here, right? Thank goodness my name is Steve or Stu or anything with an S out there, because then I can use that and it is in the right context, because it's all before Steve shared with you some information out here. So we know how tops and bottoms form intraday, all different types of instruments out there, and just how effective and powerful that tool is. Now, here's the monthly chart. We're just going to take a bigger picture view with regard to the Dow out here. And so here's the monthly chart. We're trading at 23,474. And when the market makes tops, just as this chart here shows us, we're only going back and taking a look at the 2007. Well, we can look at the 2000 top as well. If I'm going to do that, I've got to put more data out here. So give me a minute to do that. We'll just change this to, I don't know, 15,000 days, and that ought to help take care of that. We'll let this thing load. We'll see lock-in load, so to speak. And so really, if you just come back to 2000, here's your example of the price top that forms before any kind of major bear market. Of course, we take a look at Stevie's red line. Price gets below that. That tells you, okay, you may have something more than just a counter trend move that is underway. So this was the perfect identifier for significant top formation inside of the Dow back in 2007. And in 2000, we had the same type of pattern that was out here. So it exists before every type of bear market. So we fast forward, or any type of, at least some type of top, because we did get and the great thing is, on any signal that you get, the most important piece of that signal is what takes place on that next trading session. So on a monthly basis, you have to wait an entire month. What's wrong with doing that when you're taking a look at long-term holdings? Nothing, because you want to have a confirming signal out here. So if I get my crosshairs out here, we can see that price began, and Stevie's red line, really a nice tool out here. We can see that back here in May. This is May of 2014. Price began moving higher with less relative energy. You got a little bearish engulfing candle. Key reversal session looks like to me in July of 2014. Very next session negated it. There was no follow through to the downside. Price continues to move higher, does it with less relative energy. You get another confirmation out here with a nice bearish engulfing candle that forms in January 2015. What happens in February? Boom. Ignores it, reverses it, says not yet, not right now. Now what we can see that we have going on out here, we see a couple signals where price is moving higher, doing less relative energy out here. No bearish reversal signal, no cavalry that has arisen. Take a look at where we're at right now. This is live. Do we have that type of pattern that has existed before all of those bear markets? Now, look, maybe it doesn't have to form here on the monthly. This would need to form on the weekly chart. So we could just flip over, take a look at the Dow, put it on a weekly time frame, take a look at where we're at now. Do you see that pattern now? The answer is you don't see it. I don't see it because it doesn't exist. Does it work at bottoms? Yes, it works at bottoms. How about the bottom that formed out here January 22nd, 2016, when the old hammer candle formed, let alone going against the previous swing point that had a hammer candle back in August of 2015. And this is the importance of being able to truly identify bullish and bearish candlesticks out here, because until you see one of those, the market's either going to continue going higher or lower, depending on what kind of trend you're in. You don't have to, try to call that top tick. And this is for long-term holdings. And this is where you and I want to get the long-term right. So for those that are worried that the Dow is accelerating like it is, and this thing is at epic proportions, this is going to end ugly, uglier than anything that anybody has seen, those folks aren't aware of the patterns that form at significant market tops and bottoms out here. Is this time going to be different? You have to buy into and subscribe to that theory. In fact, you could just go to isthistimeenydifferent.com and just send me the money. Actually, it's not a bad idea. Probably ought to go ahead and get that website if somebody else doesn't out there. But here's the deal. Here's the weekly chart. Pattern doesn't exist. Now, a question that was posed inside the den is, well, Steve, you're taking a look at the NQ, the S&P, New York Stock Exchange. You're saying that is suggesting the market should pull back. So how do you reconcile with what you're saying right now versus what it is that you see there? I can only just really call it like it is inside each of those indices. I don't have any really more. Does that mean that maybe the Dow is going to pull back too? I hope it does. Is it going to pull back right here, right now? Probably not likely. I think this still will continue to move higher. Really, I think that the best way that I take a look at when you see that type of divergence is, with regard to any kind of a pullback, is the Dow going to just simply fall out of bed? Do I care about how many gaps to the upside that we have inside the Dow? Not right now, because we don't have any type of topping signal. We don't have it on the monthly. We don't have it on the weekly. We don't have it on the daily chart out here. It just doesn't exist. Doesn't mean that there's not going to be a retracement. What it does say is, for goodness sakes, if we do get a retracement, what you should be doing is not thinking, how do I sell the Sam heck out of this market? Instead, you should be thinking, how is it that I put that together to buy the next bottom? And if that's the question that you're asking, then what you're doing is you're going back and you're taking a look at daily time frame charts, for example, such as this one. You'd look at the daily equity futures contracts, because you and I know just how valuable those TAS market profiles are. And if you don't really think they're that valuable, then what is it and why is it that yesterday, as the NQ was cascading to the downside, why did price get down to a low of 60, 60, 50, and the bottom of its TAS daily profile is 60, 57, 75? Why is it that price stopped there? Those profiles are so cool. Now, doesn't say that price isn't going to bust it out. I don't know if it is or it isn't. If price gets down below 60, 57, this is going to tell us that the market wants to move lower. At least the NQ does. And therefore, you'd start looking for bottoming type of patterns. There's a number of them for us to pay attention. There's a number of factors for you and I to pay attention to. We'd also look over to your friend and mine, Russell 2000. Russell 2000 made a huge run to the upside. It wasn't until this profile that formed out here on the trading session of October 4th, that's when it really kind of peaked out, so to speak, out here. Up until that point, and without any profiles, it becomes very difficult to try to identify where something might pull back to, or where it's going to find resistance and so forth. The Russell 2000 is a perfect indication of why you and I really need to wait for something to form inside the Dow equity futures contract to give us some type of indication of another area of resistance or support. We don't have it. Support right now is 22,751 or 23,427. Am I saying that price is going to pull back there? Heavens to Betsy, no, that's not what I'm saying. I know that's a level of support, but we'd be looking at the other equity futures contracts, you and I would be, to try to give us some type of feel as to where it's going. For the market to really have any kind of pullback of any kind of significance, you need to see the NQ close below 60.57, and you need to see the Russell 2000 close below 1480. And if you don't have that, and as Jay points out, you just simply have a bunch of rotation going on inside of the markets. So you tell me, is the Dow have a big blow-off top? Is it forming some type of significant top out there, or is it headed higher over the long haul? Will it be higher at Christmas than it is today? Steve Rhodes with TFNN. You bet your sweet 50 it will.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back. A little bit on the shorter term scale. If we take a look at the daily chart here for the equal weighted ETF for the Qs, that's called QQEW. There's a couple of them out there. I've just used QQEW for a long time. We can see that a couple trading sessions ago where there was a divergence, that divergence disappeared on October 20th as the QQEW, top portion of my chart, made a new all-time closing high. The actual new all-time closing high inside the Qs had taken place a couple sessions before on October the 17th. It is the equal weighted that always points the way. Prices inside the Qs are going to end up moving to higher ground out there. It's why we have to take a look and watch some of these market profiles, right? We already got the intraday bottom signal. That was at 9:30, 10:30, whatever time it was. We looked at that earlier out here. And so we already got that signal. That combined with the one-day rate of changes. There's nothing that has occurred in this market right now if we took out our biases and just said, hey, what are the patterns communicating to you and I? Still just says counter trend rally, but that goes away. That spot volatility index closes below its 50-day exponential moving average. There is no other way that you can objectively call it. I'm just simply trying to really be objective about where these markets are headed to. And if you take a look at the equal weighted for the S&P 500, RSP, that's the Guggenheim equal weighted ETF. That too, back on the 20th, made a brand new all-time high, but so did the weighted version, the SPYs. Okay, if we take a look at it. So this is just beautiful, confirming messages. Everything is hunky-dory. Where did hunky-dory come from anyways out here? But everything is in good shape with regard to the signals that you and I look for. Shorter term, that's a little different. In the shorter term, it could just be a one-day wonder. It could be a few-day pullback. We know the levels that we just have to keep our eye on to communicate to you and I what the market wants to do. Okay, so enough of that, but you just have to, or you should, really have the bigger picture with regard to what the markets are communicating to us, and especially with the Dow being the strong dog. If it was going to have a top of any kind of significance, you know what would be present, and it's missing out there. So that just says, and I know I've said this once before, before, many times before, you've got to take your mind out of the thought process that this market is making some type of huge top, and you're going to see 666 again. I'm not getting those emails from those gents any longer out here, because if that's your belief, you're just simply going to get crushed. The patterns don't support that. That's just some kind of belief, or it's based upon valuations or who knows what. But those patterns have never, ever been able to identify every single market top that has been out there. Instead, just go with the known versus the unknown. So what do we know about other things inside the market? Because let's stop talking about the Dow, so to speak. What do we know about Goldilocks out here? Well, if we go take a look at Goldilocks, if we take a look at, this is the chart right here, but that's of the yen. No, that's of the euro. Let's go take a look at gold. Give me a second here to pull this back. Let's go take a look at Goldilocks out here. And gold right now keeps bumping into support. Now, where is support inside of gold? Well, you've got really two levels. The first level is one you're going to be keeping your first eye on, and that's going to be the price point of $12.75. Now, you and I know what a bullish or bearish structured market profile looks like. If we go ahead, we turn price off on this. Let's do that just because it's easier. We don't have to mess with all those lines out here. You can see that the current profile has a bullish structure. And that says that 1275.60 area is really important. Not that it can't be pushed through. This is a daily chart. So the closing price is really the king, so to speak, out here. And yesterday, price pushed just slightly below the bottom of that box, but by the end of the trading session, closed back above it. Now, resistance at this stage is the top of that box of 1289.40. So you've got a fairly narrow banded range. Can price take out 1289.40? Most certainly can. If it's going to, it needs to have the yen to be its friend and push in the right direction. We haven't, or I haven't seen that just yet. In fact, you haven't either. So what happens if gold trades below 1275.60? Not trades, closes below. Price is going to fall down to the next support level. Where's the next support level? That's going to be 1261.70. That's the bottom of its weekly time frame. If we go ahead and turn price off, what type of structure is the weekly profile for Goldilocks? It's bullish. So 1261.70 becomes a really good potential buy area. Likewise, if we start to see price close below this area, that tells us that gold is headed lower. Now, headed lower to where? You know, on a weekly chart, you just go back and fall back really to the swing point from the trading week of July 10th out here, because you still have higher lows that are forming, right? You've got this low out here from back in November 2015. It's a weekly chart we're looking at, a higher low from December 2016, a higher low July 10th, 2017 out here. But that July area, that would become our target area. Now, if price inside of gold is going to go ahead and do that, then what you know that we're going to see is we're going to see yen futures bust through their consolidation. At this stage, that has not been proven to us just yet. Everything is perfectly set up inside of yen futures because of its correlation to gold, because of its correlation to treasury bonds. Why? I don't know. We don't need to know. We could come up with theories. We don't need to come up with theories. We just know that these guys are correlated. The yen versus the U.S. dollar index. If it was the U.S. dollar index that had this type of flow between those two other instruments, we'd be looking at it all the time. How often do you see me punch up a U.S. dollar index chart? Exactly. It's not impacting. It's just that yen is just a part of that. But it's the biggest part when it comes to, for whatever reason, T-bond futures and gold. Now, what I don't know, do you know? Now, is the yen going to take out this consolidation level? I don't know. It's poised to do that. Basically, earlier in the or very early morning hours out here, the yen, in essence, yen futures, got up to Stevie's red line level and rejected it. It's a clear indication that it at least wants to go down to, in my opinion, down to the bottom of that consolidation, where we last saw a nice little bullish engulfing candle, the trading session of July 11th out there. I think we just talked about July 11th being a bottom, higher low inside of gold. Remember, this is directional correlation stuff out here, just directional, which is very helpful. Which way is the wind blowing? If we take a look at, you had a nice little bullish engulfing candle back on March the 10th. We know that traders are trying to form bottoms here. We know that because there was a nice hammer candle that formed on October the 6th. Price is now below that. You close below the low of a hammer candle. If you're long, you're wrong. That means if you were long yen futures, in essence, you would be wrong out here. But you have to look at what does wrong mean. This means you go back to the next level of support, which is not that much further below where we're trading right now. I don't know. I don't think you know what the longer term, intermediate term horizon for gold looks like until we either see the next bullish candle form and price move above Stevie's red line, or a break of this consolidation level. One spells curtains, and the other spells time to move higher. Steve Rhodes with TFNN.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. How about that Nikkei out there? If we take a look at the Nikkei, we never do. Not that we never do, but, and by the way, the tools that you and I use to call tops and bottoms out here works on all instruments. This is a monthly chart for the Nikkei. You can see that it gave you that confirming signal back here in July of 2007 when it made its last bear market pattern out there. We can see that at this stage of the game, again, a monthly chart. Let me just get rid of these wave counts out here. You can see the price is moving higher, doing less relative energy, but that's a wide-ranging bar. And what is also occurring out here is the Nikkei is breaking above resistance. The resistance that was established in August of 2015. That was that little bear sash candle. And so as we speak right now this month, the Nikkei is breaking out. There is no other pattern that you can draw. Well, you can. There's no other pattern that I'm going to draw other than the large A to B equals CD to the upside that the Nikkei is forming. The Nikkei, on a longer-term basis, is headed to a minimum of 28,789. We're 21,805. That is like, what is that move? Somebody do the math on that. 21 or 22,000 versus 28, that's 6. That's at least 20%. And is that really Steve-O's price target? Not even close. 32,577. Why? This is a 40% retracement to get to that B point of the A to B equals CD. Don't be paying attention to that wave count out there on a monthly basis. So the Nikkei is getting ready. Oh, I have to put more time into this. Let me see if I can do this before they actually take me off the air out here. 39.9, is that it? 39.9, yeah, 39.9. Thanks. Well, that's really where it's headed back to. So it's something screwy on this chart. Oh, I know how I can do it. Well, I just come back to this chart right here. Come on, get it done. Get it done quick, Steve-O. I hear that music. Here's the monthly chart. Pull it back. Here you go. The Nikkei headed all the way back to January of 1990. Folks, stay tuned. Your favorite polar bear, David White, is up next. Tom O'Brien, 3 to 5. Andy Heck from 5 to 6. I'll see you on Wonderful Wednesday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.